Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Pick. I am Jeremy Mullen and Kevin Cook will follow me, but first we will be looking at Canada Goose. The stock is a Zacks ranked number one strong buy with ticker symbol GOOS. Canada Goose is known for its cold weather jackets, but also sells other types of premium outerwear and apparel. The stock has doubled since its April lows, so the question for investors now is where to find that good entry point. So today we will look at that, and we will look at why the Goose is on a loose as of late. So let's look at the profile page I have up here. Here's Canada Goose. You can see the Zacks ranked number one strong buy. We have style scores of A in value and growth, but F in momentum. This stock has struggled for a long time, and we have seen momentum as of late, but still an F there on the score. Scrolling down here, we have a market cap of $1.3 billion, so a relatively small company. It used to be much higher, and we'll show you that on the chart. We have that forward PE just under 16 and a beta of 1.4, so a little more volatile than the market. I want you to look at this before the market open. They will be reporting earnings. So we have a couple weeks before the report. This will be a mover for the stock. So it is a catalyst, and we will look at the estimates going into that. But first, let's look at the prior quarter. We have the chart going back to 2021. And you can see, despite some beats, the stock continued to go down. And then you'd have a miss, and the stock goes lower. A beat, the stock goes lower. And we went sideways for the last about year and a half, and finally, something happened. We had a 44% EPS beat, and the stock went higher. So the question is if there's a return of this momentum higher, and we can take out these prior highs of when the stock was pretty much just bleeding lower. A little bit more about that quarter. It was the fifth straight surprise to the upside. Revenue beat forecasts, which was largely driven by strength in its direct-to-consumer channel. Adjusted EBIT reached 59.7 million Canadian dollars. This is up from 40.1 million a year ago. And gross margin expanded to 71.3% from 66.7%. So that was a catalyst for the stock moving higher after that earnings report. Management outlined several key growth priorities, including increased marketing investment to build brand awareness, product innovation to drive year-round relevance, and store expansion to enhance customer engagement. Now, let's look at the estimates, see what analysts are saying. Not a lot of coverage here. You can't see for the short term, we have some movement lower, but long term, we have higher. So let's look at the magnitude of that. Just a little bit lower here. We're still in the negative, and for next quarter, the same. But for the current year, we are going higher. And then for next year, we see a nice jump since earnings. So that we do see some earnings momentum there. That's about a 17% jump in earnings estimates there. Last week, Barclays upgraded GOS to equal weight from underweight and raised its price target from 11 to 14. The firm pointed to a more balanced risk-reward outlook, along with better margins, stronger operations, and early signs of brand momentum as reasons for that move higher. So let's look at the chart. We're going to close this. Okay, this takes us all the way back to 2019 when you can see the stock was at $72. They were selling a lot of Cokes. COVID hit, and we fell apart. Did bounce back nice, but the brand never really fully recovered, and the stock just bled down to a low under $7 after the April tariffs went into play. But look at us now. We have doubled off those lows. We are threatening the 2024 highs. Things are looking much better on this chart. Question is, how high can we go from here? Will there be a pullback after next earnings? So a lot of questions still in play, but I really like this chart. So we're going to zoom in here, and we're going to look at the possibilities of where we can go. For now, we have targets above, and how I find these targets is a fib extension of 168, 261.8, and 423.6. These are really greedy targets, but I have them up here so you can see them. Now, if you're looking for an entry to buy, you want to look at these moving averages, 21-day, 50-day, and 200-day. This is pretty simple stuff. It's $10, $11, $12. So you can set alerts and possibly enter the stock, but let's make sure you take a look at those next earnings before you pull the trigger. And if things go well, we can go up to and hit these targets. Now let me zoom in again, or zoom out again rather, because I want to pull these highs to look out for 2023. $18, $19. That's right where this target is, and $25. So these are levels to watch out for the upside for profit taking. So that is it for Canada Goose. I am kind of bullish here going into earnings, but the stock has doubled. So you want to be cautious. You want to find those nice entry points. Look at those moving averages for entry points. Look at those fib levels for profit taking. I think this could be a winner into the end of the year. All right, that's it for me and Canada Goose. Here is Cooker with his pick.
Thanks, Jeremy. My stock is Taiwan Semiconductor, TSM, and they report Thursday, the 17th, before the opening. I got a lot to talk about, so let's jump in. All right, here's the menu for today. TSMC is also what Taiwan Semiconductor Manufacturing Corporation is called. So the stock symbol is TSM. You'll also hear it called TSMC. It is the premier foundry for all things semiconductor, and you could call them the backbone of the AI economy. I often do. We think of NVIDIA as the backbone, but they're actually a dynamic duo, I think, because if you think about it, Jensen loves Taiwan Semi, and he knows that NVIDIA wouldn't be what it is without the manufacturing capabilities of Taiwan Semi. Of course, TSM loves NVIDIA too, and so they are a dynamic duo. We're going to talk about some Marvell projections of the infrastructure build out of the AI economy. Remember, earnings are July 17th before the market opens. Taiwan, while we're sleeping. EPS has gone up another 20 cents since I wrote the bull of the day last week. I'm going to show you that. You're also seeing today, so I'm filming this on Tuesday morning, the 15th. You may be watching this on Wednesday, the 16th, but just know that overnight and coming into Tuesday morning, we are hearing possibilities of lifting the export restrictions to China for chips, which would flood back in tens of billions of potential revenue for NVIDIA. Some say as much as $50 billion a year. So you're seeing NVIDIA make new highs about 170 today, and you're going to see Taiwan Semi make a new closing high above 235. I'm going to talk about Manhattan projects for the infrastructure and then the TSMC June sales numbers. So let's go to my Bull of the Day article last week, published on July 9th. I highly recommend you find this. If you just come up here in the quote search box up in the upper right and type TSM and then the word bull, you'll probably find this July 9th article. I got a ton of good information in here about TSM, the relationship with NVIDIA, and just that dynamic duo. I also refer back to some other content I've done. And we talk about shrinking the chips, right? The nodes are getting smaller. We're going to 5 nanometer, then 3 nanometer, then 2 nanometer. A nanometer is a billionth of a meter. Why the AI economy is not a bubble, I go through that again. TSMC is the backbone of the AI economy. And then a little preview of earnings. What happened 2 days after I wrote this was what happens every month. TSMC publishes the prior month's sales numbers, and those came in strong. We'll look at that, and that becomes sort of a predictor. The great thing about TSMC doing this once a month is that it tightens up the quarter, right? So as you're going through the quarter, you get an update on sales, so analysts can fine-tune their estimates, and that's why you rarely get a huge beat from TSMC because everything is so fine-tuned. There's a lot of visibility. The water is not muddy. Let's put it that way. Okay. So where are we going to go next in our topics? Well, let's do the Marvell. So Marvell did a presentation called their Custom AI Investor Event. And their Custom AI, they're not making GPUs. They're making what they call XPUs and custom silicon solutions for the data center. And Marvell is a great growth story here, just launching because of this growth. I want to show you a few slides. This is a good deck. It's over 100 slides. It was a 2.5-hour presentation. The video you could find, just go to Marvell Investor Relations and you'll find it. So let's first look at what we knew in Q1. After DeepSeek came out, I had to show people these numbers. That what is the spend of Amazon, Microsoft, Google, Meta. And Oracle should really be considered a hyperscaler in there, whereas Meta is more proprietary models like Llama and then their apps. But that spend we knew was going to be $325 billion for this year. So that's just we'll just call it the hyperscalers. So Marvell wants to point out, like I always have, hey, you got to put Tesla in there. You got to put OpenAI in there, XAI. And so what does that do? Well, you put in Tesla, Apple, Stargate, which is OpenAI, plus Oracle, plus SoftBank, building at least 10 data centers in Texas, and then OpenAI and XAI. And then you get to nearly 600 billion total data center CapEx. But as they say in the infomercials, but wait, there's more. Everybody, when I say everybody, Goldman, Bank of America, and Marvell, and myself are all projecting we're going to cross $1 trillion in calendar year 28. Does any of this sound bad for Taiwan Semi or NVIDIA? Absolutely not. And that's why NVIDIA should already be at $200. $200 was my target in June of 24 for NVIDIA, which would make it a $5 trillion stock. It's going to get there pretty quick. All right. So that was the Marvell numbers. Let's go back to our menu. So let's talk about how estimates have gone up. So when I wrote this article last week, I said in the past 2 months, the Zacks EPS consensus for 2025 has risen from $9 to $9.28, representing 32% annual growth. Well, let's go to the detailed estimates now and see what's happened just in the past week since I published that article on July 9th. Here, Taiwan Semi, Zacks number 2 rank. Scrolling down, we see, so look at this. This is the detailed estimates page. And I slid down to how much of the EPS estimates changed for this year. So this column I'm going up and down in right here. So here's your 9 to 9.28 that I flagged. Look, it's gone up another 20 cents. And so this is probably since we got the sales numbers late last week for June, which were a small beat, but encouraging enough that analysts know there's more in the pipeline. And so that's why we can probably expect an earnings beat and a revenue beat from Taiwan Semi on Thursday. All right, so we got that down, and just taking a look at the revenue growth here, 30% growth to cross 117 billion. Fantastic. The quarter they're looking for, the quarter actually could come in 32 billion. So that'll be really interesting to see. All right, back to our menu. So I don't forget anything good. I talked about China Cheers for Chips. All right, Manhattan Project. So we do a little thing on Fridays, my colleague Ethan Feller and I, called The Week in AI, where we sit down for an hour on an X in a live space. It's just audio on X. That's how spaces work. But it is recorded, so you can listen to it. So if you just follow me at Kevin B. Cook and look for one of these purple boxes, you'll find one of our spaces called The Week in AI. We always have, we each pick like 6 topics. I talked about the new $9,000 humanoid robots, Zuck the poacher, stealing talent from everywhere. Ethan talked about Larry Page's new industrial automation plans, which are pretty cool. And we each go through our 6 topics. It's like rapid fire. We each get like 5 minutes, and it's a ton of fun. And when I said last week, I said, will there be AGI debates and employment doomerism? Duh, because there's always stuff to talk about. How AGI is coming tomorrow. It's gonna wipe out jobs, all that fun stuff. But the great thing is, even if you don't listen to the recording for this, you've got 30 plus topics all linked here. We link to all the experts, because that's my thing. These are the people you should be following on X with the goods. There's Mark Andreessen. Why is he important? You saw his name on my menu sheet there. Mark Andreessen is well connected in all of this, right? In Silicon Valley. He's an investor in Tesla, I'm sure in SpaceX, I'm sure in XAI, and some robotics companies. And he thinks, we need a new industrial revolution to build everything here in the States. Now, so you might want to call this a Manhattan Project. How big could an AI Manhattan Project get? This is one of the links we put in there from Epic AI. This is something I talked about for a while, because I look at quantum computing as sort of a stealth Manhattan Project, especially with the University of Chicago creating a quantum center. And so there's some good projections in here. But the idea is that Andreessen has talked about this. Another person who's talked about this is Eric Schmidt, the former head of Google. He thinks we're We're about 95 nuclear reactors short of what we need. And I got to show you another guy here who said the same thing last week, which blew me away because I'm invested in nuclear here. Oh, this guy. He is the CEO of a company called General Matter, which is a uranium company, Scott Nolan. He says AI demand could match the entire U.S. power grid by 2030. Without urgent expansion of nuclear reactors and fuel, we don't just risk brownouts and skyrocketing energy costs, we risk not getting AI at all. That's pretty stunning. Now, of course, he's talking his book because he's a uranium provider, but we've heard it from Schmidt, we've heard it from Andreessen, and those are pretty high-level thinkers. All right, let's see. Let's take a look at the price chart real quick, just so you can see what I'm talking about. New highs. There we go. Look at Taiwan Semi gapping up over 3% today. It'll close here. It'll definitely close at all-time highs above 235. We bought it down it. We took advantage of the panic, the tariff panic, and we bought it at 145 in April. I made some mistakes during the tariff tumult, but this was one of the things I did right, was keeping NVIDIA and buying TSM at 145. And we'll hold on to that for, I don't know, probably till it hits $400 in a couple of years. All right, let's see if there's anything else juicy in here. Well, I'll just preview the June sales numbers were just good, what you would expect. And they even broke it out and looked at the first half represents a 40% jump over the Jan-June period last year, just on the top line. So, and this is read through for not just NVIDIA, but also AMD and Qualcomm, who are their customers. So if TSMC is doing well, that means AMD and Qualcomm are doing well too. And speaking of AMD, let's just take a look. I think that's busting out today too. Oh, look at that. Big gap up from AMD, holding on to 6.5% right now, above 155. We'll see where it closes. But make sure you find my Bullet Day article on TSM and go over that stuff. Decide if you want to be a buyer ahead of earnings on Thursday before the bell, or if you just want to, wait for a possible pullback. Could there be a pullback in TSM? Of course there could be. Let's just take a look at that real quick. I said last week, when I published my Bullet Day, I said, buy dips to 220 if you can, meaning if they come. If you get a dip to 220, definitely, have an alert set for that, or even this, the 20-day moving average coming in, say, just above 225. All right. That's all I got for you on TSM. Let's look forward to the fireworks on Thursday. Thanks for joining us for another week of Top Stock Picks. For more Zacks, data, freebies, and tons of information on all your favorite stocks, check out this week's promo at Zacks.com/promo. We'll see you next week.